Now we're going to bring together everything that we've learned over the past few videos and put it together into a very simple yet very effective trading strategy. So we're going to look at the support and resistance levels. We're going to look at the different types of entries. So whether it be a pullback to a support or a resistance level or a trend line break, we're going to look at all of that in this video here and talk about how you can basically put this into action right after this video. Go into the markets and start looking for your levels, start looking for the opportunities that we've talked about over the past hour or so on the various tutorials. So let's jump over to the charts now and let's get started by looking at a few examples of how we go about trading this. The first thing you're going to want to do when you come to your charts is you're going to want to identify the levels of interest. So that's the support or resistance levels that you think price is going to react to, right? So if we were here, for example, on our charts, where would we put our support and resistance levels in? Well, let's start with, and remember we do it from the higher time frame. Okay, so we're doing our multi-time frame analysis. We look at the support and resistance levels on the higher time frame, and then we look at our entries on a lower time frame. So we're choosing the 4-hour time frame. That's my chart of choice. To identify my support and resistance levels, and then I'll look for entries on something like the 15-minute chart. Okay, so looking at this here, we're only looking for the most obvious levels, and this here is an obvious level. The market has come up to this level and it's sold off from it. Okay, this here would be another obvious level at the bottom. We could say that this area here would be an obvious, oops, what did I do there? Get rid of that for a moment. We don't want to add any notes. So this here would be a level that's obvious. The market's come down to that level. It's then rallied from it. And also let's put in this level over here as well. So these are kind of obvious levels that the markets have interacted with in the past, and potentially where they could interact again. And actually we've got one in there as well. What you don't want to do is get too many in there, but we'll just put this one in here for the last one and then move on with our trading. So we would have identified these levels over here. Okay, so around February 2017. What we now need to do is let's go across to our entry chart in 2017. And go back to that same sort of time. And I don't know if we can, well, we should be able to get back there, more or less. Let's go back to the 1st of Feb, and then we can scroll forward from there. May take the chart a little time to, okay, so there we go, we're 8th of Feb, okay? So the markets that we're looking at, where we want to look is the next time the market approaches this support level here, all right, and that is on the 3rd of March. Let's scroll forward to the 3rd of March, and we're pretending now that we haven't seen this price action. Obviously this is in the past and this is the only way I can demonstrate it to you, but we're pretending that we haven't seen this price action. So I want to show you how this works and how this sets up on a chart in a sort of like a real trading scenario, or as close as we can get to it anyway. All right, so we've got to wait. Remember, patience is a key in trading. So we're waiting for the market to come to the level. And here it is. Here's what happens. The market comes down to the support level. Now remember, are we looking for a bounce or are we looking for a break? If the price action, okay, before our entry, preceding the entry takes place, because this is a support level, above the level, then we're looking for a bounce back up. If the price action were to take place below the level, then we would be entertaining a break, right? So the price action is taking place above the level. What we want to do is always buy or sell through a level of support or resistance. So in this case, it's going to be this high here. Remember, we talked about this in the entries module. As soon as the markets come down to this level, it's rallied up. It's sold off again, it's rallied up to it, and as you can see here, it then breaks the level. So at this point here, you want to be entering into the trade with your stop below here. In terms of your profit target, you could either be targeting, let's say, the next support level, okay, or you could go for 1-to-1 or 2-to-1. Again, your take profit is a personal choice. It's not something that I can tell you what I like to do, but it's something that most people find their own sort of niche or their own way of getting out of the markets. Okay, so looking at this here, you would have got in on that trade, you would have bought there, and that's wonderful. Now, remember, That's the bounce from the level. What we can also do for our trades is we can look for opportunities to get in on like trend line breaks or something like that once we've confirmed the direction. And this is quite a bit of momentum with this trade here. So we could say that actually we want to be buying the market again in the direction of this momentum here. So we've got a lot of upwards momentum there. And again, we could put in our resistance level like we have here, right? And wait for the market to break above. Now, when the market breaks above, you get involved, you place your stop below the low, and then you look for the market to go and pay you. This one it would have, I mean, if you're about 1-to-1, perhaps it pays you, but this one would have stopped you out. But that's life. That's what the market does. It stops you out. There's nothing you can do about that. You've then got to wait for the next most logical trade to take, right? So if we move along here, wait for the market to pull back. We don't want to be going long because this is just ugly, terrible price action. We wait for the market, and what does it do? Eventually, it pulls back again to the support or resistance level, right? So in this case, it was that support level. So that same one that we took the bounce from. Could we take another bounce from here again? Absolutely, you could. You just need to figure out where is the level that you want to get in at. So where is the resistance level, right? So we would put in this here, like so. So the market's come down, it's pulled up, it's kind of going back. So we would say that this is a resistance level that we want to buy through. All right, so we wait for the market to go through there. We enter when the market breaks the level. We have our stop below the lows. And remember, we'd put it 10 to 20 pips below the lows because that's, we don't want to be stopped out. We don't want anybody hunting our stops. Not that they would hunt ours, but we don't want to put it where collectively people typically put stops because you're likely to get whipped out and then the market goes in your favor, which no one wants, right? So again, we play the bounce from this level and look at what happens. We take the bounce and the market rallies on up and it would have paid you. You know, whether you're going for 1-to-1, 2-to-1 or whatever, that was a good opportunity that you would have made money from. Then looking for other sort of pullbacks, there aren't really any here. When this does start to pull back, it doesn't give you an opportunity to enter. So then what we have to do once you get that sort of price action is you need to wait for the market to then interact with one of the support or resistance levels again. We get that down here. This isn't something that I like the look of though, because I like the price. When it gets to a level, we want it to interact with the level. This sort of price action here takes place way, way, way too far away from the level. So from that perspective, it's not really interesting for me. And I'll then wait for another opportunity. So we move on forward throughout the charts. We can see that actually if you had taken that opportunity, it would have made you money, but it's not really the point. That's not what we're looking to do. We're looking to take the high probability setups, right? We can see that the market here, this would have been a not too bad opportunity. The market breaks below, but closes back up above. It then swings back down. It fails to get any lower. All right, so these are the kind of things that we like. Put in our resistance level there. When the market breaks out above this level, as you can see, it rallies on up quite nicely and goes on to pay you. You could also have done something like this. So put in a counter trend line here. So when the market breaks up, you can see it pulls back a little bit, and then when it breaks above, you could have taken a second entry there if you were so inclined. I probably wouldn't have taken this one because I prefer more candles in one of my pullbacks, so it probably wouldn't have been the best one for me, but it was an opportunity all the same. It's something that you could have taken if you would have liked. Okay, this here makes more sense in terms of an entry. Right, if we look at this here, what we've also got going for it, which is quite nice, right, I'm talking about this pullback here. So if we move that up a little bit, can you see how this is a level of support? Over here, support, then it becomes a resistance, resistance again, market breaks through it, pulls back to it, and again, you would have played the same type of price action. You know, how would you have done this? You could have put in, said that the market's pulled back to here. I want to be getting in when the market breaks a high, so you could put that in there. So you've got a little bit of consolidation along this level, down, up, along, breaks through the level, and then starts trading up. And again, your stop somewhere beneath here. Your profit target, 1-to-1, you would have made it. 2-to-1, you would have made it too. You know, go for the next profit, for the next resistance level, you would have made that too. That's how great it is, okay? And when the market comes up to this level, is there a way to play it? Yeah. So the market pulls up to the level here. It pulls away again. Right, we need to wait for a swing back up, which we get there. At this point, so we've got this point here, that point there. Okay, we wait for the market to swing back up. We then put in a level around our support, so somewhere around there. And we wait for the market to break that area. That's exactly what happens. It takes out this level, stop above the highs, and the market falls down to the support area again. And this stuff takes place all over the charts, again and again and again and again, right? So we've got another area over here. Where is that? Let's look at this one. So this is a trending one, which is quite nice. All right, and that is somewhere on the 19th of April. So we're not too far away from that in terms of time. We look at this here, 7th. Let's wait for a nice little rally up. 13th. It's not what we want. Eventually, you get a nice big rally up. 19th of April, right? So that's this high here at the 19th of April. So we could have then put in our resistance level there, okay? Which is where this is. We can't trade this at the moment. We're going to wait for the market to give us an opportunity. Eventually, it breaks through this level. And this is one of my favorite concepts. It's something called previous support becomes resistance and previous resistance becomes support. So if we look at this on the 4-hour time frame down here, we can see the market broke through that level, it pulls back to it. When you get this sort of nice harmonic price action, you nearly always get a fantastic trade. Okay, and that's what we get here. So the market eventually pulls back to the level. Patience. Patience is what we need. Could we have taken a trade up here? Yeah, probably. But we want the high probability trades. We want the ones that are going to pay us again and again and again, because then we can have the confidence to take more size in our position. So it isn't necessarily always about quantity. It's about the quality of trades, right? So the market pulls back here. We can then put in a resistance level, remember. We want to buy through some sort of a level, support or resistance level. We've got that there. So the market breaks down, moves sideways, and then eventually breaks up. And then you could get involved here. You could buy with your stop below the low. The market moves sideways a little bit, actually giving you another opportunity. So you could even have taken a trend line break here. So we could have pushed this in there like that and sort of had a bit of a little trend line in there. And you could have taken a break. So there were actually two opportunities in that position there that you could have used to take your trade. And then you get involved and it makes you money again. And this stuff happens again and again and again all over the charts, right? It's not rocket science. So in summary, what do? We look for support and resistance levels on our 4-hour chart. We then try and figure out where is price going. We look at the price action, look at the moving averages. What direction is it moving in? What's the most likely next direction for the market to move in? Once we've decided that, then we wait. It's a patience game. Then we wait for the market to come to us. We don't try and chase it. We don't go to the market. We wait for it to come to us. We wait for it to come to the support or resistance levels that we've already identified. And then when it gets to that level, that's when we enter our trade according to our rules. So in the entry that I've shown you, it's one of my personal favorites, is a break of support or resistance. Sort of like showing that the market is reacting to a level. Right? If you can do that again and again and again, you can be disciplined, right? You only take the highest probability setups, the best ones. Then you're going to come out ahead of the game. If you've got a 2-to-1 risk reward, wow, of course you're going to come out ahead of the game. But it does take discipline. It's not just going to happen overnight. I've given you some really, really good information over these videos here. I'm going to post some other things that are going to help you as well. So this isn't the end of this little mini video course that we've done for you here. There are going to be other things as well. But you should have enough to get started to go at least go and do some testing, go and do some live trading with a little accounts. Don't go straight in. Prove to yourself that this works. Okay, but I hope you found value in this video here. I hope that you're really excited about this particular strategy and trading this way. This is only the beginning. This is the foundations. There are lots of other ways to trade the markets, but I think that this is probably the easiest way for anybody that's new or struggling to the markets to get consistent. Then when you want to look at longer term investments and bigger trade sizes and things like that, there are other things that we can do. But this right now is what you need. This is going to get you on the right road to making money and being profitable. All right, so thank you very much for watching, and I'll catch you in the next videos.